News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with retaliation in the Middle East. The U.S. has hit dozens of Iranian targets in a 2-hour operation following Iran's surprise ballistic missile attack on a U.S. base in Jordan this week. President Trump had warned the U.S. would be hitting Iran, quote, very hard. Israeli Prime Minister Benjamin Netanyahu says he stands behind the president.
We're partners. We're allies. He's the senior partner. It's the United States of America, let's not forget. And I'm the junior partner, but I'm the Prime Minister of Israel. And when I have to stand up for the interests of my country and the security of my country, I do so.
Israeli Prime Minister Benjamin Netanyahu spoke in an interview with ABC News. We get the very latest from Bloomberg Middle East correspondent Abir Abu Omar in Dubai.
The U.S. military did strike military targets. It stopped short of targeting bridges, civilian infrastructure. So for the time being, we're still seeing measured attacks on both fronts by Iran and by the United States, but definitely not a positive sign because we're seeing an escalation. That ceasefire that was signed, or that temporary ceasefire that was signed in Switzerland, seems to be a thing of the past now.
And Bloomberg's Abir Abu Omar reports 2 liquefied natural gas tankers were hit with drones off Egypt's Mediterranean coast around the same time as the U.S. attacks. There has been no claim of responsibility.
Well, Nathan, as the war takes a toll on the U.S. weapons stockpile, the Defense Department announced 2 massive contracts worth about $135 billion to major U.S. defense companies. The Army reported a $59 billion agreement with Lockheed Martin to bolster production of Patriot interceptors. At the same time, the Pentagon unveiled contracts worth as much as $76 billion for General Dynamics and Huntington Ingalls Industries to expand construction of the U.S.'s top nuclear submarines.
Let's turn to the economy now, Karen. Bond investors are sending a message following the Federal Reserve's decision to keep interest rates unchanged and the news conference from Fed Chair Kevin Warsh. We get the latest from Bloomberg's John Tucker. John.
And Nate, it's not a good message. The market's questioning Warsh's credibility. Investors sent the long bond yield to a 19-year high. Stocks tumbled, the Dow falling over 1,000 points. It's because the Warsh Fed didn't move, even as Warsh acknowledged an inflation problem.
Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability.
If there is an inflation problem, Torsten Slok at Apollo Management is like a lot of investors asking this question.
Well, what are we waiting for? We didn't get a clear answer for what exactly are we waiting for, which was, of course, a subtle way to try to get some forward guidance.
It doesn't help Warsh's credibility. The 3 members of the Fed's Open Market Committee dissented. If Warsh can take away any solace, maybe it's from the fact that he hasn't been skewered yet by President Trump. Inflation, by the way, has been running above the Fed's target for 5 straight years. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, monetary policy is also in focus overseas this morning. The Bank of England is getting set to make an interest rate decision. Let's go to London and get the latest at Bloomberg's Ewan Potts. Ewan, good morning.
Karen and Nathan, the UK may have a new Prime Minister, but the economic backdrop for the Bank of England remains much the same. Policymakers are set to stick to their wait-and-see approach on interest rates later today. The UK's inflation outlet still uncertain and still hanging on the conflict in the Middle East. The bank will also try to make sense of it all with its latest economic forecasts, those coming alongside the rate decision due at 7 a.m. New York time. In London, I'm Ewan Potts, Bloomberg Radio.
Ewan, thanks. Let's turn to the equity markets now. Futures are higher following a pair of big tech earnings. Let's start with Microsoft. Those shares are up more than 7% in early trading. The company's cloud unit grew 43%, its fastest clip in 4 years, and that pace is accelerating. Analysts say that suggests Microsoft's AI and computing services are making inroads with customers. On the earnings call, CEO Satya Nadella told analysts the company is quickly increasing its data center capacity.
We're also bringing capacity online faster than ever. Over the last fiscal year, we have reduced dock-to-live times for new GPUs in our largest regions by nearly 50%. All up, we added another gigawatt of capacity this quarter and remain on track to roughly double our overall capacity in just 2 years.
And CEO Satya Nadella also indicated Microsoft would hold the line on new capital spending this year.
Well, on the flip side, Nathan, shares of Meta, they're down almost 9%. The Facebook and Instagram owner gave a disappointing quarterly revenue forecast, and that's stepping up pressure on CEO Mark Zuckerberg to ease investor concerns that the company is not swiftly benefiting from its massive outlay on artificial intelligence. Zuckerberg spoke on the company conference call.
Our investments in AI are accelerating every major part of our core business. They're improving the experience for people using our apps, driving better performance for advertisers, and helping our teams build new experiences and ship faster. Second, we are developing new personal agents that will be the foundation for our next wave of products and revenue lines in the months and years ahead.
Mark Zuckerberg and Meta reported its lowest free cash flow in years, a sign of ballooning expenses for AI bets, which could amount to $145 billion this year. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.